So with the Economic Injury Disaster Loan Program, the annual interest rate is about 3.7% for businesses. For non-for-profits, it's going around 2.75%. And remember, with the Economic Injury Disaster Loan Program, any amount over the 10,000 that is basically a loan. If you do not use any of it for the qualified expenses for that first 10,000, it becomes a loan. So remember, businesses 3.75%, non-for-profits 2.75%. With the Economic Injury Disaster Loan Program, the loan term is 30 years. And that's for businesses and non-for-profits. So that's a long time. Even though it may not be a lot of money, it's still a long time, and there's going to be a lot of interest that are going to be on it. The Economic Injury Disaster Loan Program is given to you by the SBA as the lender, and the underwriter is also the SBA. So look at that video that we have on that, but it's 30-year term. The Economic Injury Disaster Loan Program, the first payment date is 365 days or 1 year after the loan origination date with deferred interest. So what that means is the interest will still accrue, but they'll defer it to your first payment. So if you're at 3.75% interest rate and any amount over the 10,000, once that first payment is due, it would have a large amount of interest on it because it's 365 days you've been waiting to pay it, that they deferred that interest. So that's very important to understand, that the interest doesn't start when the first payment is due. The interest starts as soon as they give you the money. With the Paycheck Protection Program, the annual interest rate is not to exceed 4%. But what we're seeing for businesses and for non-for-profits, they're really going at a 1% interest rate, which is really good. So the annual interest rate, even though they say at the SBA not to exceed 4%, it's really around 1% right now, and that's good. So that's a really good interest rate to really go through, because even if you don't use it for payroll, that 1%, you can't beat that. The Paycheck Protection Program loan term is 2 years. So once you receive the money, the term is for 2 years. And that's for businesses and for non-for-profits. With the Paycheck Protection Program, the first payment date is 6 months after the loan origination date with deferred interest. Remember, deferred interest means that the interest will still accrue in that 6 months before you have to pay it. So once that first payment is made, it has interest from the date you received the loan till that first day. So 6 months is really not a long time. And the reason why is because with the Paycheck Protection Program, the lender is basically either a fintech company, a credit union, a local bank, or a national bank. If you haven't seen the video of who's the lender, I definitely think you should take a look at it, because the lender is not the SBA. The lenders are banks, whereas the underwriters are the SBA. So 6 months after that loan is given, you got to start paying up, and it's at a 1% interest rate. But remember that interest is deferred in those first 6 months and accrues on it. So when you compare the Economic Injury Disaster Loan to the PPP, you can see that the interest rates, the 3.75 to 2.75 for the EIDL, are pretty high. The PPP cannot be more than 4%, but what we're seeing is that they're giving 1%. So if you had to compare it, the PPP is better. The EIDL has a 30-year term, whereas the PPP has a 2-year term, and the first payment with the EIDL is in 1 year. Remember, it's first come, first served basis. With the PPP, the first payment is in the 6 months. And once again, first come, first served payments, but the interest accrues. That means that interest will still be calculated until that first payment is made, and I think that's very important. So let's brainstorm. One of the biggest things that I would brainstorm about is that, hey, if I'm not going to get this money forgiven, and if you haven't seen the video about loan forgiveness, please take a look at it. If you're not going to get the money forgiven, and what are you going to use this money for? If you know you can't pay your employees, especially with the PPP in that first 8 weeks, I would say take that money and find a way to make sure it's giving you that 1% interest, because you just don't want to sit it under your bed or sit it inside a non-interest bearing account. So brainstorm at what you're going to do with it, because the interest accrues. Yes, you can take a deduction for the interest on your tax return, but it's not going to give you the bang for the buck that you're really looking for. And that kind of goes to one of the tactical tips and tricks, is that if you know that the money that you're going to get, you can't make it all forgiven. And once again, if you haven't seen that video about forgiveness, please take a look at it. If you know it's not going to be forgiven and you're going to have to pay this money back and it accrues, put the money into a bank account or a money market account that's going to accrue more interest than they're going to accrue on you. With a money market account, you could take the money out 5 times. So let it sit in there and get a higher interest rate than what they're going to charge you, especially if you're going to be using the same bank. So it kind of becomes even free money. And on top of that, you get the deduction of the interest. So you can't beat that. And once again, this interest accrues. With the PPP, it's a flat interest rate of 1%. With the EIDL, there's different percent interest rates, and there's no collateral, and there is, you can pay the loan earlier. There is no prepayment penalties or fees. So if you want, you can, if you have a loan, you can pay it earlier. So it's not a problem to do that. If inside these 8 minutes, we have given you some form of information that you did not know before you started, please hit the like button. Please hit the share button. Once again, we're trying to share as much information as possible and give it a nice digestible bites. And look at all the videos. This is a 6-part series. There's a lot of information in there. We did a lot of research, and we're taking information that we know and questions that we know our clients are asking and try to put it into these digestible little videos. So please like and share it, and have a great day. Thank you.